Over the past several years, options trading in the US has exploded. In fact, the market is on pace for yet another year of record-breaking volume. What used to be the domain of professional traders on crowded exchange floors is now accessible to almost anyone with just a few taps on a phone. But accessibility doesn't mean simplicity, and it certainly doesn't mean low risk. At its core, an option is a contract that gives you the right, but not the obligation, to buy or sell a stock at a specific price within a specific time frame. One of the main attractions, options allow investors to control more exposure with less upfront capital. That leverage can be powerful, but leverage cuts both ways. Your risk in options trading depends heavily on how you use them. If you're buying options, your risk is typically limited to the amount you invest, but time and volatility are working against you. If you're selling options, you may collect income up front, but you're taking on obligations that can become very expensive if the market moves sharply. That's why traders sometimes describe options as picking up pennies in front of a steamroller. Small gains can be tempting, but the risk of a sudden loss is very real. The options market includes a wide range of participants. Some use options to hedge portfolios, others use them to generate income, and some are simply speculating on short-term price movements. Each approach requires a very different risk profile, time horizon, and level of discipline. Options are not a one-size-fits-all tool. You'll often hear terms like delta, how sensitive an option is to the stock price gamma, how quickly that sensitivity changes vega, how much the option reacts to changes in volatility. These are not academic concepts. They directly affect outcomes, especially when markets move fast. Used thoughtfully, options can help manage risk, enhance returns, or create income. Used carelessly, they can magnify losses far faster than most investors expect. That's why options should be part of a broader strategy, not a substitute for one. If you're considering options in your portfolio, the most important question isn't how much can I make? It's do I fully understand the risk and does this align with my long-term plan? That's where professional guidance matters. If you'd like to understand whether options make sense for your financial goals, we're here to help you navigate that conversation calmly, strategically, and with discipline.